Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going through M1 Finance, selling off a stock within my wife's Roth IRA, and adding two brand new stocks to the portfolio. So, if you are brand new to the channel, I do make stock market, personal finance, and real estate investment videos every single week, so consider subscribing. And of course, if you do like the video, give it a thumbs up button below. So in this video, we're going to be removing a stock from the portfolio. Me and another investor were discussing Roth IRAs. We were sharing our stock picks back and forth, our portfolios, and he mentioned to me, hey, you know that you have an MLP within a Roth IRA, and you'll still get taxed on that in the future if you make over a certain amount. And I said I had no idea. So he sent me this page to read over, and the company here that is an MLP, which is a master limited partnership, we're going to go ahead and remove it from our portfolio because in the future, I don't want to have any headaches with my wife's Roth IRA. You know, eventually, if there comes a time when the income is over $1,000, I just don't want to have to deal with paying taxes on that within the Roth IRA. The Roth IRA is a tax-sheltered account that's designed to keep your capital gains, your dividends, your interest tax-free at 15.5%. And I don't want to have to deal with the headaches in the future over the next 5, 10, 15, 20 years of this portfolio, having to get a special K-1 form and have to pay taxes on it. So we're going to remove it from the portfolio. So right off the bat, the company that I'm talking about is ticker symbol BX, the Blackstone Group. Now this is positive currently, up 7.58%. I've made a gain of roughly $30, plus they've paid out some dividends, roughly $10.82 there. So pretty good there. But we are going to be removing it from our portfolio. And Blackstone Group, it is an asset management company. They do hold real estate, they do financial advisory, they hold the private equity, asset management. And, you know, it's a pretty large company all around the world, very international company here, you know, founded in the States, but they do have offices in, you know, Tokyo and Hong Kong, Paris, London, all over the world. So really interesting company there, held it in the portfolio since January. Now, what exactly is an MLP? Well, an MLP is a master limited partnership, and well, how are we going to get taxed on these within our Roth IRA? So initially, MLPs were created back in 1986, which allowed companies with primary and business activities in real estate, commodities, natural resources to issue shares of their partnerships to the public. So if you own an LLC and you have a partnership, you know, each of your partners has a specific share of that company. Those are pass-through entities. So if you have an LLC, you probably know what I'm talking about. The taxes, the income that you make within that company, they don't pay any income because it's an LLC. It's a pass-through entity. It gets passed on to the holder of that company. So here, taxation of the MLP. If you'd like, you can go ahead and pause it. Otherwise, I'll go ahead and read it. So when owning MLP shares, the company does not pay corporate tax. It's not an S corp, C corp. This income tax is instead distributed to the income, distributed income to the partners or unit holders. So all of us that are holding shares of this company are considered unit holders. This becomes taxable income to the unit holder when held within a retirement account. This income, if it totals over $1,000 for the unit holder, it's considered unrelated business taxable income, or UBTI, for the account, and is subject to tax even if it's held within a tax deferred, which is an IRA, 401k, or a tax-free account, which is a Roth IRA, Roth 401k. Therefore, if you own any MLP shares within a Roth IRA, you could owe taxes on income, again, if you've made over $1,000. So you have to be careful. You're going to pay taxes on this even if you don't take any distributions out of your account. Normally if you leave your taxes or your distributions, your gains in there, your dividends in the account, you would get tax sheltered after 15.5. But depending on your scenario, talk to your tax advisor. Your tax advisor. I'm not a tax advisor. I'm not a CPA. So don't listen to my tax advice. But go talk to them. If you're holding any sort of shares within your Roth IRA, it's in your best interest to maybe avoid it, drop them out, because any sort of exposure of MLPs within your Roth IRA could give you a headache here in the future. So, interesting article. I will have this in the description below and also in the comment section. I'll have it in my comment there. So check it out. If you guys hold any MLPs, let me know in the comment section below. Do you guys hold any MLPs? If so, which MLP are you currently holding? Now, I've already researched a couple stocks here. that I've kind of, these are REITs that I wanted to replace this MLP with. I wanted to be invested in a couple real estate investment trusts. MLP, BX, Blackstone Group has real estate investments within it, but because I am going to be removing it, I want to replace it with another REIT, a real estate investment trust. So I've already screened these, and I'm going to be adding 2 of them to my portfolio and kind of seeing how they perform here over the next 5, 10, 15 years within my wife's Roth IRA. So really quickly, start at the top. Number 1, we have the FRT, Federal Realty Investment Trust. This is a retail REIT, grown their dividends for the past 50 years, paid quarterly, 3.32% yield right now. We have ticker symbol UHT, Universal Health Realty Income Trust. Payout ratio, null because their earnings per share doesn't show up here. Grown their dividend for the past 32 years since 1986. Their dividend yield is 3.79. We have ticker symbol SKT. This is Tanger Faculty Outlet Factory. I don't know why I said faculty. Anyways, it's a REIT within the retail sector. Grown their dividend for 25 years since 1993. Dividend yield 6.36. You might look at that and say that looks like a great dividend yield, but we're going to check out that price here, which has been slammed and caused this yield to go high. Ticker symbol ESS, Essex Property Trust, Residential REIT, grown their dividend for the past 24 years since 1994. Dividend yield 3.03. Ticker symbol O, this is a very popular one. When you mention REITs to a lot of investors, they're like, oh, you should go buy Maine or O. Those are the main ones, Maine O. So, grown their dividend for the past 22 years, 83% payout ratio, dividend yield 4.52. This is the only monthly paying REIT of the ones that we're discussing here. And we have ticker symbol UBA, Erstadt Biddle Properties, Residential REIT, grown their dividends for the past 18 years since 2000, dividend yield 5.45%. And last, we have ticker symbol DLR. This is Real Estate Investment Trust. They do a lot of technology, turnkey data centers. They've grown their dividend for the past 13 years since 2005. Dividend yields currently 3.59. So those are our choices that we're going to be looking at today. Now, one of the main things I always like to look at a company is have they grown their revenue and net income positive over the last 5 and 10 years. So let's take a look here. FRT, I like to look at these in percentages just so we can see the growth over the last 10 years. You can see revenue up at least 7.1% on or higher over revenue, free cash flow, and net income over the last 10 years. Over the last 5, you can see positive numbers there as well. If you take the 5-year, divide it by 5, so 40 by 5, that's an 8% year on their revenue, 8% on average per year growth on their revenue. Pretty good there. UHT, take it 40 by 5, that's 8. So again, revenue there, 8% on average per year. Over the last 10 years, divide these by 10. So revenue at 15% on average per year over the last 10 years. So you can see here their net income up 1,400% over the last 10 years. That's very nice income there. SKT, we can see here, if we look at their net income here in the red, their net income is only up 2.3% on average over the last 10 years. And if we look at their net income over the last 5, they're down 42.3%. Now, this is a REIT. Guess what sector they're in? They are in the retail sector. Okay, can you continue on? ESS, you can see here, everything within, this is 5 years. This is 100 pi 5 is 20% growth over the last 5 years in all their, revenue, income, free cash flow, and 20, again, over 20% there in their revenue, free cash flow, and net income over the last 10 years. Realty income, again, very nice over 10 and over 5. Erstadt, this one, what was this one? Oh, this is commercial REIT. It's a residential REIT, but they do a lot of commercial. Let's see here. Over the last 5, pretty positive there. Over the last 10, you can look at their, again, net income, 3.2% on average over the last 10. Over the last 5, 25 by 5, that's 5% on average over the last 5. So not a whole lot of growth there in their net income. Digital realty income, they're negative over the last 5 in their net income. And over the last 10, they are up very nice over the last 10. They have had a couple issues with their net income. This could be due to tax reform. You can see here, very quick, sharp decline there. It could be due to tax reform, but we'll see. And that is their revenue, free cash flow, net income. Now, another thing I like to take a look at on these is probably not, PE forward. That could be important. I don't know if it's completely accurate here. I'm going to go ahead and just share with you guys their earnings per share. So we like to see earnings per share moving positive. So if the orange is positive, that's a great looking, it's moving in the positive direction. They're growing their earnings going into the next year. So FRT, growing their earnings going into next year. UHT, that universal healthcare, they're currently not displaying earnings right now. I'd have to probably check them out at their website. Just look at their quarterly and yearly reports. But that's not showing up there. It's not pulling on either of the websites there. SKT, we can see that their orange is on the bottom. So current EPS is 0.96. Forward next year is actually declining. They're expected to drop their earnings per share. Not a good outlook. Again, that's that retail REIT. We have ESX growing their earnings per share. Realty Income growing their share. Herbstadt declining. Again, this is a residential REIT. UBA residential REIT, declining their earnings per share there. Digital Realty increasing their earnings per share there. Now, we do have two residentials. We have ESS and we have UBA. ESS is multifamily. They do a lot of multifamily. This is a real estate investment trust. They acquire, develop, redevelop, and manage multifamily residential properties selected in the West Coast communities. They currently own 133 apartment complexes, communities, 26,000 units, have over 1,000 units of various stages of development. Interesting there. Now the other one here, UBA, is also residential, but they do commercial. So here they acquire, owner, and manage commercial real estate investment properties in the United States. They have 31. Let's see. They have only 40 properties containing approximately 3.7 million square feet. It's hard to fill those places when you only have 40 properties and you have a lot of square footage. You really have to have at least all the time, otherwise your company really suffers. So they're both in the residential, but I think this one does have a little bit of a suffering point to it. If we take a look at the differences of these in price, let's go ahead and look at price over the last 10 years. We'll see that this one, it did have a dip here in 2008, between 2008 and 2010, but it did recover, and it does move positive in the general direction, positive here. If we look at UBA, we'll see that this one hasn't grown very well. This is that one, if we look at it percentage wise, it's grown only 2% on average per year over the last 10 years, which isn't very healthy at all in comparison to ESS. This is that just normal residential. This one's grown up roughly 15% on average over the last 15 years or 10 years, and over the last 5, it's up 13% on average per year. So differences there, commercial versus multifamily. And that's all I really want to cover. I mean, we could look at assets and liabilities, but everything looked pretty fair. Let's not change it. Let's go back to normal. So everything here is about a half. Their liabilities are roughly half of their assets. So here, 6.2 to 3.8. This one doesn't show anything. Oh, no, it did show. Okay, it was their earnings that didn't show. So here we have 4.9 to 2.7, 2.5 billion to 1.9 billion. ESS, 12 billion in assets to 6 billion in liabilities. Realty Income, 14 to 6, a little over half, or a little under half there as far as liabilities go. We have Herbstadt, $996 million of assets, $328 million liabilities. Pretty good ratio there. Digital Realty Trust, 21 to 10.35 billion there in assets and liabilities. So kind of interesting. I wasn't really looking at the price of these to their 250 day. We know that REITs got slammed here recently. REITs, we can look at 3 year. You can see that federal FRT has gone nowhere but down over the last couple of years. Raising rates, Fed started coming out, raising rates in 2017. I believe they raised them twice last year, and now this year, 2018, they've raised them 3 times. So since they've started initially, declaring that they're going to be raising rates, this company really hasn't, they haven't hit 52-week highs any longer. They're quite a ways off. They have been trending sideways as of January. We don't know, with rates continue to rise, will this within the retail sector can do well. We have universal healthcare. Again, over the last 3 years, you can see that this one has topped off July 2017. It's in that healthcare sector. I don't see healthcare facilities really going down even in a downturn. I think this one's very niche specific. I already hold a healthcare REIT, which is APLE, Apple Hospitality. I have that within my Roth IRA. So I'm not looking to add really another healthcare REIT. This one did look kind of interesting there. SKT, I don't want anything to do with retail right now. Between FRT and SKT, they're both retail REITs. And right now, retail is, not the really great place to invest. You can see their price is down pretty huge over just the last few years. ESS, this is that multifamily company. You can see that this one, even during the downturns of the last 3 years, this one is continuing to move positive. 5 years, 10 years. This is the max graph here. So here during 2008, they did have a bit of a dip here going into recession. But if you had invested through that time, this is ESS. They've been growing their dividend since 1994. So if we look here, 1994, way back here when it started, as long as they've been active, they've always paid out a dividend. They've always grown their dividend. So even during these downturns, they've continued to push out dividends. Realty income, the dip 2008 quickly recovered within a year or two. And it has had a couple issues here recently. And that's just, again, rising REITs. Realty is a retail REIT. I think they do a lot of malls, I believe is what they're thinking here. Herbstadt, this is commercial REIT. I'm not really interested in holding commercial properties. I wouldn't invest in commercial properties myself. I like multifamily. I just bought a duplex. Me and my friend just went over there today, looked at it, took a couple of videos. I'll be doing a video on of it here soon. But and then here we have Digital Realty over the last 3 years. Everything moving positive here. They're turnkey data center. Very positive future outlook. I think it's a really good niche. So after having compared all these stocks, taking a look at them, reviewing them, looking at their balance sheets, my stocks that I'm going to be adding here are ESS, which is the Multifamily Real Estate Investment Trust, and DLR, which is the data center turnkey here. Residential development. If here go down to the bottom, they do turnkey data centers, power-based buildings. I think it's a very interesting niche. I like technology. We have a data center. It's our DR site. If our main location goes down, we have a data center that does. They've done this. That they're our backup. So I think it's a really interesting niche. So I'm going to be investing in ESS and DLR within my wife's Roth IRA. So in order to add these stocks to our portfolio, we're going to go ahead and select Edit. Ooh, we do have to sell off BX first. So in order to sell off BX, you can do it two ways. You can click on BX, click Buy Sell, and sell it off. Put in your $403.03 and continue and sell it off. Or, if you guys would like, you can also edit your portfolios. You can select the company, select Remove, and now you have 5% available to invest in other companies. So we're going to go ahead and click Add. We're going to go ahead and type in our ESS. So we're going to go ahead and add it to our basket of stocks. And then we're going to add our other one, which is DLR, which is Digital Realty Trust. We're going to go ahead and add this one to our basket of trust. We're going to go select Add. Now they're added into our portfolio, but they're at 0%. So I am going to be reducing a couple percentages here. I need to free up. I'm going to have these at a 4%. Because my other one was at 5%, I'm going to actually, let's see, I do need to free up 3%. I'm going to add these at 3%. And they're both REITs. Instead of just having one, because I did sell off BX, I'm going to replace BX with 2. So I'm not going to have them be too large a position to kind of balance each other out. But I am going to be reducing, what was the other one here? I was going to reduce it. Caterpillar? No. I'm going to reduce Stanley Black & Decker down. This one has taken a hit. I am below equity by quite a bit. So I'm going to go ahead and continue adding to this one while it's down. But Sears just bankrupted. They declared bankrupt. They're not going to be paying back Stanley Black & Decker. They owe them like $9 million. I think Stanley Black & Decker will recover, but they are down hard, and I'm still going to be investing in this company. But for the short term, I am going to lower them down to a little bit lower here. I'm going to take it down to 5, and I'm going to bump ESX up to 4. Whoops, not 45. There we are. And we're going to go ahead and have a total of 100%. Now if we click save, it's going to say, warning, any removed slices will be sold during your next trading window. Proceeds will be reinvested into the pie. So I will go ahead and click confirm. And there we are. We have swapped out Blackstone Group. It's completely removed out of our pie. And we've added Essex Properties. Now I am going to go ahead and fund the money, fund the account here a little bit more. I'm going to go ahead and go to funding and M1 account balance. I'm going to go ahead and just deposit. I'm going to go ahead and just put in, let's see, I'm going to have to max out her contributions eventually, but for now I'm going to go ahead and pump in $1,000 now. And on Monday, we're going to go ahead and deposit automatically. It'll probably completely fill up those positions, plus average down on a couple of these positions that have been hammered here recently over just the last few weeks. So that is basically it for this video. Hopefully you guys have enjoyed it. So what we did in the video is we talked a little bit about MLP, Master Limited Distributions, how they shouldn't really be held with any Roth IRA. If you're investing in the long term, eventually you will probably hit that point where you will end up having to pay taxes on your income that you're receiving from these MLPs. So instead of having to deal with that in the future, I went ahead and just nixed it out of the portfolio. I've decided I want to go ahead and add 2 new REITs to the portfolio. We're going to be adding DLR, which was again that turnkey technology REIT. And we're going to add ESS, which is a multifamily residential REIT. So that is it for this video. If you guys did agree with me as far as the REITs that I'm holding, let me know in the comment section below. Do you guys hold any REITs yourself? Let me know in the comment section below. I always like to hear everybody. If you can leave me a comment, I always reply back to you guys. So if you guys have any questions, suggestions, let me know. I read it all. So thank you guys for tuning in. A quick disclaimer, I'm not a financial advisor, tax professional, so if you are seeking tax advice, seek a tax advisor or CPA. I'm not a financial advisor, so I'm not providing financial advice. This is all for fun and entertainment. I'm just kind of helping my wife build out her portfolio and invest for the future. So thank you guys for tuning in. I will see you next time. Have a great day. Bye.